We are going to talk about three things specifically here in this video. What happened today with AMC, what happened in the markets, the news you need to know, and what to expect for tomorrow. That is number one. Number two, we are going to talk about the hedge funds that are getting completely blown up as of right now, because there's multiple well-known hedge funds besides just the little guys that don't get talked about that are even getting blown up. We're talking tens of billions of dollars here. That's the second thing. The third thing is going to be essentially the option activity that we are seeing on AMC stock, why tomorrow could be a very bullish day, and kind of what I expect over the next couple of weeks, because specifically this option activity, a lot of it is very short duration. We're talking out to June, massive amounts of calls coming through, and you're also seeing some of these options that are pretty damn far out the money, and hedge funds typically don't do that. So let's get into all of this information. Hit that like button and subscribe to the channel. Get your free stocks down below in the description with Webull, Moomoo, and Public. Thank you guys for doing that and supporting the channel. If you guys want to come trade with me live in real time, link down below in the pinned comment to do so for that one. And just forewarning, if you guys do join, we have not been doing all too much trading, maybe a couple trades a day. I think the real opportunity here is buying the dip on a lot of these stocks that are down massively, that are going to be big companies in the future. We did make a Ross trade today for earnings, Ross Stores. I'm sure you guys have been to one of those in your lifetime. We did buy a put on that, some June puts, and stocks down about 17% after hours, so that one should be nice. We did get some AMAT puts as well. AMAT is down almost 4.5% here after they did report earnings as well. So the trades, you know, a small amount could go a very long way, and that's essentially the best way to play this market, since it is so back and forth and the premiums are so stupidly expensive. But nonetheless, let's get into this information, and that's what I first off want to start with is AMAT and Ross, because you have a retailer like Ross Stores that is down 17% here in after hours. That could in theory drag down the market substantially coming tomorrow, just like Walmart earnings did, just like Target earnings did, and now you have Ross. So you could get more concerns about potentially the consumer, so on and so forth, coming from Ross earnings, and that could affect the sector a lot. Now AMAT, they are a chip producer, right? So they are in the same category as like an Intel, a Qualcomm, TSM, AMD, Nvidia. So the fact that they are down 4.5%, not such a good thing for some of the semiconductors. They actually did not really hit any of their estimates. It was pretty bad across the board, and they actually did guide down lower, but they have a big range on it. So we'll see what happens coming on the earnings call if this thing does come down more. But for AMAT, it's a decently sized earnings move, and it was down substantially more, about $4 more. So we'll see. I think these could affect certain sectors, most definitely coming tomorrow, and that could be a weighing indicator on the markets, and could have people get a little bit scared. Now, at the same time, what actually happened today? Well, nothing really happened. There was very little news. Overall, all of the indexes were red, but the Dow was the worst off. The Dow Jones Industrial Average dropped about 0.75%, S&P dropped 0.58%, and the NASDAQ fell 0.26%. Russell 2000 hardly eked out a green day. The VIX was down 5.20%. So very surprising, this back and forth market. You would think the VIX would be slightly green, as it is the volatility and fear and greed like gauge, you could call it that. It monitors S&P 500 puts and calls. When the VIX goes down, that means there's less puts being placed on the markets, and usually that doesn't happen when the indexes are red. But what you're seeing here today is a lot of money going from those defensive, more seen as, stable companies that are in the Dow, which is only 30 stocks, and going into more of NASDAQ stocks or Russell 2000 stocks. Not really Apple, not really the big guys. They're not getting as much love today. But if you look at your portfolio, you were probably substantially green today, like I was as well. So a lot of money is going back into PayPal. It's going back into Lucid, back into Affirm, even DraftKings, SoFi, right? AMC. AMC was up about 2.5% today. So that's really what you're seeing for the day. And I think it just simply comes down to the fact that the QQQs, the NASDAQ, Nasdaq is down. Let's go ahead and refresh this. Year to date, down almost 28%. 27.91% is a massive beating. And once you do get these massive sell-offs and you do start to get closer to a bottom than not, which I do think we are closer to a bottom than not, I think we're probably going to hit new lows, maybe 360 on the SPY, maybe 330 by the time this is said and done. But here in the short term, until we get more information, until we get more data, until we get, a new inflation report or the next Fed meeting, which is still substantially far away in the grand scope of the markets. It's 4 weeks, 1 day, 15 hours, and 40 minutes away. So it's still a month away, and a lot can happen in a month. But until we get something else to go off of that is either good or bad, the markets, they're kind of going to be in this weird limbo-like state, right? Fed speakers, they're going to have a big impact. And we actually did get Fed Kashkari that came out and said we are removing accommodation even faster than we added it at the start of COVID pandemic. And you've seen substantial tightening. That's why the 10-year treasury yield looks like a damn momentum stock. Interest rates are going through the roof for real estate, for cars, personal loans, whatever it is, even margin debt and lines of credit, especially variable lines of credit, not so good right now. It's becoming very, very expensive. So I don't know if this will be seen as a good thing for the markets, but you've definitely de-risked a lot of stocks, and those stocks are the ones that are actually heading up today. But there really wasn't any news, and I don't expect to get any crazy news coming tomorrow that could move the markets. You do have, like I said in earlier's video, you have retail sales for Great Britain, and that could be key because a lot of people are paying attention to Europe, because obviously we do a lot of business in Europe. And if Great Britain and Germany and Italy, all these other places, France, start to go into recessions, or looks like they're going into recession, then that could be a foreshadow of what to expect here, because Europe usually goes into financial crises a lot sooner than America. America tends to be a lot stronger of a market overall, so that could move the markets, just like we seen with retail sales in China that was down 11% for the year. Could be substantial, could move our markets, but I'm not really expecting it to, if that makes any level of sense. I think retail sales are expected to be very, very bad for Europe. Now, for China, and I think a reason why the markets are not dropping 2 or 3% today is because you had more news coming out of China, potentially lifting more lockdown restrictions, and that's going to be a very good catalyst. There's really 4 big catalysts right now. You could say 2 of them are kind of the same thing, and these could potentially be very bullish catalysts. We need these 4 catalysts to go away to see all-time highs, or at least 3 of them. So you have the war in Ukraine. That's very big because that is food inflation, that's energy inflation, that is the fears of World War III, right? Huge catalyst. I think the markets are really not paying attention to this, but if new things happen and we get new developments, that could be big for inflation. That is a very big deal. For China as well, that is also a very big deal. Inflation and just the overall state of the Chinese economy is a very big deal to America, and if China does open up, you could expect energy prices to fall, and that should also help inflation. So those are 2 big catalysts. I would say China's a little bit more important because I think the Russia situation might last a little bit longer than not, and I think that's what the markets do expect. But those could be very good. Seeing inflation coming down, if we get one really good report that's like, wow, like this is really starting to come down, then that's going to be a very bullish thing for the markets. And then ultimately, when the Fed does U-turn, the Fed U-turning will be a lot further down the road. And once all 4 of those are gone, or you could just say China opens up, inflation goes down, and the Fed does U-turn or stop raising as aggressively, that is when the markets are going to hit new all-time highs. Now, there is a time duration factor here that it's going to take a while. It's not going to happen in the next couple of months. These things, it's probably going to take at least the next 6 to 24 months to get back to all-time highs before the Fed ultimately does U-turn and become more accommodative. Now, take this opportunity to buy as many shares as you can and really acquire large positions in a lot of these companies that you want to own for the long term. Now, do what you guys want to do. I like the long duration growth. I like buying companies now that will be much bigger in the future, like a SoFi, like a DraftKings. You could throw for a little bit of a firm in there. I like Square. I like PayPal. I like Trade Desk. I like Snapchat, right? These companies that are going to be much bigger in the future, that's really what I'm currently focusing on as of right now. And I think that's where a lot of the opportunity is. I really don't think it's in trading options right now, given how back and forth this market is. And given the volatility that we have seen, the premiums on the option chains are insane. Like, even if you do get a major drop one day and you bought options 2 days ago, well, you might not make money on those, because it's like if you live in a flood zone, right? You're gonna have flood insurance, because if anything happens, right, the insurance brokers, they want to make money as well. And when the whole market's getting swamped out, then you're gonna have to pay more for home insurance, right? So now you have to pay more for options because there is a larger implied volatility. The options market right now either expects stocks to rip up or just crater through the floor. If you don't get one of those moves and it's violent to the downside and continuing over the course of multiple days, you're not going to make a lot of money. Like, for an example, if you trade SPY options, just even trades on a multi-day basis, like swing trades, I mean, for a normal market environment, if you were to hit like a 3 or 4% down day on the S&P or NASDAQ, you might make 1,000% on an option. Well, right now, if you hit that, you might make 100% because the premiums are just so expensive. So that's a little food for thought right there. Let me know your thoughts on that down below in the comment section. When do you think the markets will actually start to head back up? And what are you currently buying as of right now? So that is that. Nothing else too crazy to really report. Nothing really happened today. A lot of people are still digesting a lot of these 13F filings, and I think that is what is helping a lot of these beaten down stocks actually recover a little bit, because you're seeing all of these new stakes in, specifically like AMC, for an example. You have Goldman Sachs increasing their position by 36%, now owning over 3 million shares. You do have Ray Dalio adding a brand new position. You have Citadel doubling its net long exposure to AMC stock. All of that is seen as a good thing for a company. It's better than these institutions selling out in terms of creating that positive momentum. Now, as far as the hedge funds are concerned, we have Melvin Capital, hedge fund torpedoed by GameStop frenzy, is shutting down. Now, he said in a letter to his investors that he had decided that the appropriate next step was to liquidate the fund's assets and return cash to all investors. And if you guys remember, not too long ago, Melvin Capital said they were going to stop shorting stocks and to start reallocating their portfolio to a lot of these long positions. And they did that a couple months ago, and they have gotten absolutely blown up as the NASDAQ, like I said, is down almost 28% in the first 5 months. This is a very brutal market, not only for you and your portfolios, but for hedge funds alike. Even look at this. Tiger Global, one of the best known hedge funds of all time, has lost $17 billion this year. That is a loss. That is gonna take a long time to come back. And when you're so over leveraged like these hedge funds are, you start to get into a really bad situation. And just for an example, why this is so bullish for AMC and why I've been talking about this for 6 months, take a fund like Tiger Global. If they had a short position on AMC, let's say a 1% short on AMC. Let's consider their portfolio. I believe it's down like 40 or 50% this year. Let's just call it 50% for simple math here. They had a 1% short position on AMC. Let's say they had they had 50% profits in their AMC position, right? So they've made, double. Maybe they've made 1%. Their portfolio is still down 50% for the year. Well, let's say AMC does start to rally, and that 1% of their portfolio, not a big deal, right? Even if a short position goes against you in a normal market, but say AMC 10x's. Now that short position becomes 10% of their portfolio. They've already lost 50%. So now they're down even more. They don't have the money to remain in a short position like that. They would be forced to cover very, very, very quickly. And that's what I would expect to see, especially as this executive order does actually get implemented around June 2nd or June 3rd. I think you're going to see a parabolic rally in AMC stock. I obviously could be wrong, but if you know about this executive order, you know the timing on this is just ridiculous. That's why I've been talking about this whole situation for the last 6 months. This is primed. These market conditions are primed, I should say, for massive short squeezes, and that's kind of what you're seeing across the board, but not really shorts covering. It's more so a lot of the option activity that is switching from puts to calls on stocks like AMC, stocks like SoFi. This is the seventh day in a row that SoFi stock is actually green, and that's one of my largest holdings. So that is definitely looking very good as of right now. But I think it's a lot of, like I said, the hedge funds actually taking their put positions off, and the market makers are able to go out and buy back stock to de-hedge those puts that are being sold and going out of the money. Now, as far as AMC in the data you guys need to know, the option activity, take a look at some of these. January 19th, 2024, $50 call for $207,000. May 27th, $16 call. So just next week. June 17th, $11 call. May 27th, $13.50 call. January 20th, 2023, $145 call. And then a lot of May 27th, $13.50 calls going through right there. A lot of bullish activity for the day. Some of them, like the 145 and the 150 strikes, super far out the money. So that would imply another short squeeze. At least that's, what picture you could paint out of a hedge fund buying a $50 strike call and a 145 strike call when the stock's trading at $13 is making a massive bet on another short squeeze. Now, the interesting flow sentiment for the day, you're looking at 6 orders totaling $13.5 million, positive order value of 100%. So it's looking pretty damn good there. 100% positive order value. We will take it with a pretty high dollar amount as well. Now, the short interest of free float sitting at 21.87%. Current shares that are sold short of 112.75 million. Cost bar max at about 4%. Utilization at 100%, and days coverage sitting at 3.23. Now, I do want to point out the option activity as well. If we do see a big move tomorrow, you only have about 35,000 calls that are in the money, 256,000 calls that are out of the money. That's potentially 25.5 million shares that would need to be bought by the market makers. Even if half that amount or a third of that amount ran into the money tomorrow, you're going to see a massive rally due to the very short-term nature of these daily options. That's why you can get big swings in daily options, because if market makers got to start buying shares because they're running into the money on a Friday when they expire that same day, it causes a lot of instantaneous hedging, and that's where you can get those mega bounces. If you guys have watched the channel for a while, we've called out a couple mega bounces, and they always happen on Thursdays and Fridays. And considering the executive order, the bullish activity that we're seeing, it would certainly not surprise me. Now, a lot of people don't realize this as well, and I like to point this out, that the puts that are in the money is equivalent as the calls that run from out of the money into the money. It's the same level of buying power when puts are in the money and they run out of the money when a stock does go up. And you're looking at about 81,000 puts that are currently in the money. So that's potentially 8 million shares that might need to be bought by the market makers coming tomorrow if AMC did go on a big rally, or even half of that, or again, a third of the puts running out of the money would cause millions and millions of shares to be bought on the open market by the market makers. That's simply how this game goes. Now let's take a look at the brief levels, technical levels for AMC stock. And the first thing I want you guys to notice, we close above $13 per share. That is our support level. It looks like we should be able to hold that up. We're not getting a clean break. We're not breaking above 15, but we're holding up above 13. So that is certainly a very, very good sign, because that was our low back here, and we only hit it for one day, and then we went straight back above 13 and seen a 200% rally after that. So I do think we will start to make the next legs up until we do get close to that executive order and actually getting implemented. And then I think we'll start to see bigger moves like you've seen back here in June, right? You were seeing pretty decent moves from 890 all the way up to about 14. But once you got to about 14, you started to see like a 13% day. Next day, 20%. Next day, 20%. Day after that, 35%. This was the day the executive order actually went into effect, and then you really started to see those big rallies. But even if you start to get like 10, 20% days, that's all you need until you start to get the 100% day or the 300% day. That's where you get really into like short squeeze territory like we've seen right here. We've seen pretty mediocre rallies, 20, 30%, 10% here and there. And then you've seen that 100% day where the stock went from 35 to 72, and boom, that's where you make massive amounts of money once the stock does go to those extreme levels. So we'll see. Nothing's a guarantee, but I am very, very bullish where we currently sit. And I did buy a June 10th, I believe, a $25 call for about $50, and that could obviously do very well if AMC does go on another parabolic rally. But if you guys want access to all those trades, link down below in the pinned comment. Now, other key technical levels, like I said, $15 per share. If we do cross above 15, maybe tomorrow, then you want to watch 17.13 per share. That's going to be the resistance level. That is the 50-day moving average. My price prediction was in between 15 and this 50-day moving average. So we'll see. It looks like we're going to be pretty close. It's been a solid week overall, but we may or may not hit that actual price target. It really depends what happens tomorrow with the option activity. The MACD is bullish, but not bullish by too much. The RSI, even after these couple of positive days, we're still extremely oversold, sitting at about 41.83. Neutral is 50. So when you put it into that perspective, we still got quite a bit of room left that we could go on the RSI, to the upside before we would even be close to getting, overbought. So that is pretty much going to be all for this video. That is what you guys need to know. Thank you for tuning in. Hit the like button, subscribe to the channel, get your free stocks down below in the description. Like I said, enjoy the rest of your day. Enjoy that summertime sun. I will see you in the next one.